Today we're going to be looking at Tesla and what happened on 6/16/2002. We're going to learn a couple other things, so check it out. Let's do this right now. I've got the monthly up for Tesla, and you can see right here, I'm going to go ahead and draw my trend lines. This is what I do when I'm starting to research some stocks and check things out and see how it's going. So I look here at the low after high and go to the lowest point here and then line up with the next low, and there's my line. That's how I do it. And do the same thing for the top. Let me see if I can drag this down. We do the same thing for the top and high, and just go right across the top for the highs and see how it lines up, these two. And then the line continuation, what does it do? It perfectly hits the previous high as well. So from here, I kind of get an idea of what's happening. Okay, I'm looking at this. I see a 2 to the upside. I see a 2 to the upside, but it closed on the way down. And then we see a dump last month. And then this month already, halfway through the month, and we've got a inside candle because it hasn't broke the previous month's low right here. Hasn't broke that, so it's still a 1 right now. But if it does touch and test this bottom line, it will be a 2 to the downside, showing us a continuation of this downward trend. I next go to the weekly, see what's happening there. The trend lines don't change, they're still the same, everything pertains to it. And see what's happening here as well. We can see that it is almost identical to the month. You can see just this downward trend going down. Have a 2 to the downside, 2 to the downside, 2 to the downside, 2 to the upside, but it finished down. We have a 2 to the downside and a continuation of another 2 to the downside. So that's a 2-2-2 continuation of a bearish move. Going to the daily, what we saw today. Today was almost too easy to pick, just way too easy to see what was going to happen. The stock had stopped here yesterday, and we started in a downward gap, a huge gap down to the downside. And there's a 2 candle to the down. Yesterday's was a 2 to the upside, then we had a 2 to the down, and in the previous videos we talked about that. But what happened today was extremely interesting because we started with the gap down, and we see some areas that we could line up, some entry points and some targets of where we could have gotten out on our trade. Okay, so the first thing we do is, as this candle, we know that it started here and it worked its way up and started going down. What do we know? We know that the actionable signal would be a possible target of entry would be at the bottom of the previous day. Once it breaks that, it's a green light to go ahead and go in. So we put a line here, okay? And this is our target for entry. So once we set that target for entry, we then look for the next possible point of support. And we do that by the previous candles, because everything left is history and it gives us clues that we can see and we can find things. So if we go back 2 days, we see the wick or the shadow of that day's candle way down there. But before that, go back another day. What you see is the wick, or I'm sorry, the shadow of the previous day's candle. And you see that right here. It's going to be a level of support. Okay, let's run this all the way across here. That's going to be a level of support for us right there. If this candle continues to go down and it tests this level of support, what is the next level that it'll possibly test? Look at 2 days ago. We have this long shadow down here. So what we do is we put another line here, and that will be target number 2. Okay, so we have an entry, we have target 1, we have target number 2. Okay, but where was it exactly in the whole big scheme of things? Where was it? Here's our line, right, that we set from the monthly, and we set on the weekly, and we see it here in the daily. Did it test the bottom? No, it didn't. Could it possibly test it tomorrow on Friday dump day? Possibly. It's already going to open right here unless something crazy happens during pre-market. But if it opens here, it's going to have to do a lot of legwork to get up there to be a 2 to the upside. Okay, so what we're going to see here is either it's going to bottom out in a continuation of this downward trend, which I think will be the case. But we're gonna eyeball it again. Where did it go? It surpassed our second target and then retracted back up to close the day. Again, not testing our trend line, but it did retract off of this target number 2. So today was an easy call and test on what was going to happen. Very easy. And it's so much easier if you just get yourself organized and see what is happening. See the trade before you even make it. Have your entry point. Have your target 1, target 2. If you have a target 3, then go after that target 3. And don't get greedy. Just if you took your profit here, great. If you took your profit here, even better. But we're in it for the long haul. We're not these animals that we're just gonna stay in the trade just to make a million. Nobody hits home runs every time at bat. A lot of the times we strike out. The home run hitters strike out more than the base hitters. Base hits is money in your pocket. Okay, think of it like that. That base hits are money in your pocket. Little bitty trades, and these winning percentages are great. And even if you're making little bit amounts, at the end of the year you're going to have a green portfolio. You're not going to have a red one because you were swinging for the fences every time you traded. All right. So again, STRAT, learn it, live it, and it is very simple. Again, very, very simple to trade the STRAT, but knowing exactly when to get in and when to get out is the best trading strategy, period. Because if you can stick to the trade, and if you can stick to the STRAT and keep your emotions at bay, you're going to be successful. Those who have taken up the STRAT, who religiously practice this thing, are in the green. Everyone I know that uses it properly are in the green. Sure, they make mistakes. Sure, sometimes emotions come into play, especially if you have a long run of wins. But we have to trade the trade. We cannot force the door open. We have to wait for the door to open. Sometimes that means not trading anything at all. Today was one of those days because I do options. And yes, I could have made a little bit of money here on this Tesla on puts, but they were running so slow and we're so close to the end of the week that the decay was moving faster than the stock was going down. And towards the latter part of the week, when you're playing options, that's what tends to happen. So you need to be in the money or very close to in the money if you're trading options, very close to the end of the week, because time is running out. Time is not your friend, especially with options, and they're going to kill you. You're going to end up being a bag holder. But it's still good to see how the STRAT works and how everything sets up perfectly. We knew exactly what was going to happen here because we saw it, and we know something called time frame continuity. So what that means is, I've covered it before, but I'll say it once again. Go back out to the monthly. Okay, what do you see? On the monthly, we have a big red candle to the downside, but it didn't cross the previous month's bottom yet. Could it? We got 2 more weeks. I'm pretty sure it's going to happen. But it's to the downside, so there's a negative. Okay? Bring yourself back a little closer. Bring it back to a week. Okay? What do you see? A 2 to the downside on the week. Okay? So there's 2 of your long-term time frames in continuity going down. Okay? Look at the daily. What do we have? We have a red 2 to the downside, right? That is time frame continuity. We have 3 long-term time frames that are all congruent, who are all equal, who are all going in the same direction down. So that gives you a good idea that it's time to play puts or it's time to go short. All right, so again, if you want to trade, you're going to have to get some knowledge, and I'm here to teach, and that's it. And I don't want anybody's money or anything. It's simple, and I'll walk you right through everything. I know I'm still learning. We never stop learning, but the more you know, the more you're going to have knowledge, and the less you're going to have to depend on your emotions on trading. You see exactly what's happening in real time, price action, time frame continuity, and the strat. You got all those things working for you. You're going to know what's going on. You're going to know when to get in. You're going to know when to get out. All right, so we're going to check you out next time. Hope you enjoyed this video.